Welcome to The Explainer. Today, we're digging into a pretty stark warning from economist Lynette Zang. She's basically saying the US dollar is on its last legs, and we're all about to feel the effects. So let's break down exactly what she's seeing. So Zhang kicks things off with this really powerful metaphor. She wants you to think of the US economy like a car you're driving. It looks fine, shiny on the outside, but she's warning that if you pop the hood, that engine is seriously sputtering. And if we're not careful, we could all end up stranded on the side of the road. All right, so what exactly are those problems under the hood? Well, Zhang says if you just glance down at the economy's dashboard, you'll see the warning lights are flashing like crazy. It's a clear signal that something is fundamentally wrong. And that first warning light, it's this absolutely staggering number. We're talking $18.4 trillion in US household debt. And it's not just that it's a huge number, it's growing fast. Zhang points out that it jumped by $185 billion in just one spring. So the problem isn't just there, it's accelerating. And it's not just about the total amount of debt either. What Zhang is really highlighting is that more and more people are falling behind on their payments. We're seeing delinquencies on things like car loans and credit cards just keep climbing. But here's the real kicker. This isn't just a problem for low-income folks anymore. It's now hitting middle and even upper-income households and hitting them hard. Okay, so beyond all that debt, there are other troubling signs. You've got the huge American services sector, which is basically at a standstill. Then you have orders for big-ticket items, think durable goods, they've plunged. That means businesses are getting nervous and they're not investing. And on top of that, jobless claims have shot up to their highest level since 2021. Now for Zhang, these aren't all separate, isolated problems. No, they're all symptoms of that exact same sputtering engine she was talking about. So you might be thinking, what's the proposed fix for this sputtering engine? Well, it's a new kind of digital money called stablecoins. But here's the twist. In Zhang's view, this isn't a solution at all. She argues it's actually the next and maybe even more dangerous phase of the entire problem. Okay, so what exactly are stable coins? It's super important to get this part right. These are not central bank digital currencies. Zhang explains them as digital tokens created by private companies. So you could imagine something like an Amazon coin or a JP Morgan coin, and each one would be designed to be pegged one-to-one with the good old US dollar. And this is really the core of her warning. Because corporations could, in theory, create these coins super easily, super cheaply, and in basically unlimited amounts. She believes the real goal is to just flood the system with new money. And think about it. What happens when you inject trillions of new digital dollars into an economy? The value of every single dollar you have saved up just plummets. And that, she says, is the fast track to hyperinflation. And make no mistake, this isn't some small-scale experiment we're talking about. Zhang points to analysts who are projecting that the stablecoin market could absolutely explode. We're talking going from about $125 billion today to a massive $2 trillion by 2028. That is a tidal wave of new corporate-created digital money just waiting to crash into the system. So, all of this, the debt, the slowing economy, the rise of stablecoins, in Zhang's view, it's all building towards one thing, an inevitable breakdown, a complete reset of our entire currency system. Now, at the very heart of her argument is this really key distinction. On one side, you have what's called fiat money. That's our US dollar. Its value is basically based on government promises and our confidence in it. But on the other side, you have sound money, like gold, which is backed by a real, tangible asset. And she argues that's what really holds its value over the long haul. And to really drive this point home about fiat money, Zhang points to a pretty shocking number. See, according to her analysis of official data, a dollar from back in 1913, right when the Federal Reserve was created, today has the purchasing power of just 3 cents. That means 97% of its value has just been inflated away into thin air. It's because of that massive loss of value that she says having a bridge asset is absolutely essential. Her thinking is that you need something tangible, something real, that can hold its purchasing power and basically carry your wealth from the old collapsing system over to whatever new system comes next. Okay, so faced with this really stark warning, what does Zhang propose people actually do to prepare? Well, her advice is pretty direct. Stop relying on the system to save you and start building your own personal lifeboat. She lays out this 3-part strategy, kind of like layers of protection. First, you got to be able to sustain your lifestyle day to day. Second, you need to preserve your wealth for the long term. And third, and this is one she says is absolutely critical, you need to build community. And this all breaks down into what she calls her personal mantra, basically a checklist for resilience. It's about having the basics covered: food, water, energy, security, but also things you might not think about, like having things you can barter with, a way to preserve your wealth, a safe shelter, and, you guessed it, community. If there's one crucial takeaway from all of this, it's that beyond any physical asset, Zhang says over and over again that building strong local networks, your community, is the ultimate form of security. She truly believes that in a real crisis, neighbors helping neighbors becomes more valuable than gold, more valuable than anything else. And that really brings us to the end of this explainer on Lynette Zang's warning. Her perspective is, well, it's pretty clear. She believes the current financial system is living on borrowed time. And that leaves all of us with a final, really important question to think about. If she's right and a reset is coming, what does a sound money future actually look like?